I'm Michael Fox, and this is the Prospector News podcast, and we're on location at the Current Trends in Mining Finance, put on by the New York chapter of the SME, and I am honored to have a Canadian Mining Hall of Fame executive, Rob McEwen, join me today to talk about the general state of the mining industry. Welcome, Rob. Good to have you.
Good to be here.
So, you've had decades of experience in the industry. What is your take on the current state of our industry?
I like it. From a price standpoint, I think we're in a period that I've seen several times before. Tightness of supply and demand increasing. So I think we're in for higher prices going forward.
When was the last time did you see a setup like this?
It was coming off the bottom of 2015.
Okay.
We bottomed down there, and then we had a big increase. It gave some of it up, and then it went up again.
Okay. So if we were to treat this as a baseball game, what inning are we in?
First.
First?
Yeah.
That's a pretty bullish statement.
That's the game we're playing.
Well, it is. Now, is this across all the commodities, or is this strictly a precious metals, strictly a critical metals, or is it broad strokes to everything?
I think with the amount of money that has been created by governments around the world in the last 4 or 5 years, and the enormous amount of debt that's been incurred, we're setting up for something that's going to be debasing the value of currencies around the world. And so you're going to see increases in agricultural products, you're seeing it in building materials, you're going to see it in precious metals and base metals. I happen to have a bias towards precious metals, and I guess some to copper right now because now I have a large copper deposit. But I think the precious metals continue longer because the effects of the irresponsible actions of the government to debase currencies is going to be long-lasting. And there's a large part of the population that's moving into a retirement stage of their life, and they're looking and saying, how do I make the money that I have stretch to my expiry date? And that's going to be a concern, and they're going to say, how do I protect it? So they're going to be going after the precious metals. And on the other side, you've got this politically mandated drive to the green mandates that are disrupting all sorts of expectations about how much product do we need to see this climate change endeavor going. There are people coming out and saying, we don't have enough right now. We don't have, given the time it takes to discover, to get it, the environmental approvals once you've decided you have a large enough ore body, and then to build it. So there's going to be shortages as we move forward, and that's going to cause more people to look at the price movements and step into the market.
Now, do you see government changing their ways in the permitting process to speed up permitting for some of these critical metals in order to meet their targeted goals? Or are we it's going to be one of those situations where they want you to create more mines so we have more metals, but we still have to do it in the same slow fashion?
Well, that'd be a very rational way of thinking about it, which I don't think governments are capable of doing. Maybe as we go down the road, people will start looking and saying, politicians in particular, going, mining is one of the highest paying industries in the countries of the developed world, and for that matter in the undeveloped world. So why wouldn't you want to encourage that to lift the standard of living across the country and improve the tax base? Will they do it quickly? I mean, we've heard about critical metals. The president's talking about we need to protect them. We need to do it at home. But it hasn't come translated and gone down to the permitting process. The BLM isn't coming out and say, okay, come on in, we're going to permit you right away. Rather than relaxing the number of regulations, you've seen a continual increase in regulations and more restrictive. So to achieve the ends that they'd like to see, we need some real changes to the permitting process right now, the development process. So are we going to see it right away? No. It'll probably take a couple of years.
But you see it evolving in that fashion in order for them to, and when I mean them, the government, to achieve the goals that they're searching for.
One day the light's going to go on.
We always hope that, but sometimes it just never does. We've addressed the permitting. There's also the investment side of the equation, and I've heard like scary numbers into the trillions of new mining investment that's needed in order to achieve the resource levels to go to that green economy. What kind of numbers of investment have you been hearing about, bandied about by some of your colleagues?
Well, there was one report I read not too long ago by an Australian-born geologist. He works for the Finland Geological Society, and he was just looking at copper, and he was estimating that there's going to be a deficit of about 4.5 billion tonnes of copper, and that the current reserves are about 880 million tonnes. When he looked at those numbers, he said, this is going to be very difficult to meet those projections. He said the amount of copper that's there would be equivalent to all the copper made up until now in the history of the world.
Wow.
Some others aren't quite as expansive on their estimates, but we heard this morning in a panel that you're looking at about a 1.5%, maybe 2% increase that happened over the last 125 years, and that was an annual increase of prices, and even that would be looking at a 20 to 30% shortfall in annual production to demand going out to the early 30s. So that's suggesting, assuming the world keeps urbanizing, particularly in Southeast Asia, assuming the EVs and the regenerative energies are going ahead as the politicians want us to, there's a shortfall. Let's call it 20-30%. What type of impact on prices would that be? If we don't go into a recession, do you have a lift of 20 or 30%? Do you see copper sitting up at 520 and beyond?
I would think if we can't supply it, the price has to go up. You mentioned the recession. I know it's common fallacy to say this time is going to be different, but I actually wonder if this is one of those exceptions to that rule where this time actually will be different. And this is the way I've looked at it, and I'd be interested to hear your thought on it. But as we head into a recessionary period, generally government looks for infrastructure programs in order to put people to work, in order to maintain some degree of employment in the country. And this time being different, I think those projects will be part of that green energy mandate, which will require us as a mining industry to be supplying more and more commodity in order to fulfill that demand. And historically, when there's been a recession, that's been headwinds towards commodity prices, and that's why I think this time may actually be different. In your more experience in this than I am I thinking in the right way, or is that the fallacy, and this time is going to be the same as all the other times?
The government is working very hard to avoid a recession. If they feel the economy is slowing down, they're going to have to do something about rates in the short term. And they'll print more money, and they'll try to keep the ball rolling. So you can see it slowing down in certain areas. The disruption of global trade patterns will influence that because it changes where you source your material. So we're going to see more nationalizations in terms of sourcing. Where do we get it? Yeah. I'm quite optimistic about for the mining companies that pay attention to what the politicians are saying and start expanding their audience and supporters out into the broader world, the general public. I think we're entering a period where it could be one of the times when we have the lowest cost of capital for the industry. And that might say why. PricewaterhouseCoopers came out with an estimate not too long ago, and they said there's over $20 trillion invested in ESG investments around the world right now. So once people start focusing on mining is critical to modern civilization, some of that money could be available to the mining industry. And for mining companies that alter their behavior and are doing things that address the complaints of the business, they could be the recipient of some very low-cost capital, which I find very exciting.
Definitely. Where else is this capital going to come from? Because in order to get all these new mines for all the commodities that we're going to need, money has to flow into the industry. And right now, if you look at most people's stocks, they're well below where they should be given where the commodity prices are currently. So how are we going to get generalist investors, investment banks, family offices excited about the mining industry again and get that capital flowing?
By working to make it sexy, the mining industry, by going out and talking to a larger audience. We've been very good talking amongst ourselves, but we're only the market capitalizations of the mining industry is probably 1 or 2% of the total broad market. And yet we are critical to modern civilization. We're seeing in auto companies, Stellantis was an example of saying, we have to secure our future source of raw materials so we can continue building our cars and convert to electric vehicles. Stellantis came in and invested in our copper project, and that was the first time an automobile manufacturer invested in a copper project. Volkswagen, a number of them are running after nickel. They're running after lithium. And that's just one industry looking at it. But who uses all of these products? How are they going to source? So I don't see any shortage of capital coming along as more people realize they have to have a secure source of supply. So it's like the days of Henry Ford.
Okay.
He went to the Amazon for rubber and got Firestone making tires for him. He went to Michigan to mine copper. He went to Sudbury to get nickel. It's this vertical integration that is being brought about by the disruption, the global disruption of the supply chain as a function of the geopolitical tensions that are happening in the world.
So you see the investments coming from supply chain management rather than from the traditional retail investor, investment banker.
Yes.
Okay.
There's capital out there. There are some hedge funds looking around and they're saying, well, we'll just buy some private equity. We'll take something private. Get it out of the public arena where it's messy. But I just think there's a real opportunity for the mining industry to think about remaking itself in terms of addressing the perception, the negative perception the general public has. And think of Uber for a moment. Uber came along and decimated the taxi industry, and they came out of nowhere, it seemed like. But their success was predicated on the fact that they addressed the issues that really annoyed the customers. There were cars in poor repair. The cars were smelly. The drivers were rude. There was no way of complaining and getting satisfaction.
the taxi would come and not give you a ride.
You didn't know when it would come, or it said, no, that's not far enough. I won't give you a ride. Uber comes along and makes it easy. It addresses all of that, and we embrace it, and it just takes out the market. So I use that as an illustration to say, well, why can't we do the same thing? Why don't we look at all the complaints? We're using too much water, we're emitting too much carbon, we have too much noise, too much dust, and a whole plethora of other reasons. Well, let's just start knocking those out and say, well, we've addressed this. And then showing the general public that we're not that bad, that we're using technologies today, that we're open to new technologies, and we're trying to make a place that's more comfortable to work, more enjoyable to stay at. Maybe we put a hotel on the property, invite public in for tours, photo ops, put on sporting events, but look like we're part of society rather than off on a distant landscape.
Yeah, we often try and hide our mine sites from people to see.
Rather than thinking, well, let's turn it into a jewel, that it complements the landscape.
Yeah.
Not try to camouflage it.
Interesting. So that's the future. You know, we talked about mining finance. We talked about the state of the industry. Let's talk about Rob McEwen and where his money's going to go.
Oh.
I know you'd like to, keep the cards close to the chest. So we'll keep this in broad strokes and generalities. But when Rob McEwen is looking for opportunities, what is the boxes that are you looking to check that's forming your investment theses?
Well, take you back a bit, Mike. I grew up in the investment industry. I invested in precious metals, gold bullion, equities. And then when I formed Goldcorp, I kept a portfolio for the company, and I would invest in junior exploration stories. Or I'd invest in something that had been, it was distressed. The cycle had changed and it was scraping along the bottom and there was no money, and I'd go in and buy. And that worked really well for Goldcorp. We made about $80 million trading stocks, and that paid for a lot of our capital development. We didn't have to go raise equity. When I left Goldcorp, I said, well, I still like this space, the junior space, and I would buy 10 to 30% of juniors, public companies. Developed a bit of portfolio, and two of those came together and we created McEwen Mining. So I'm always, the front door of our office is open. I'll listen to any story because I want to hear what's going on in the market. Maybe not any story, but most stories. And I'll make some investments. Just recently I bought into a company at a fellow who'd worked with me. He went off, ran a royalty company, and came back. He's a director today, recently on our board of McEwen Mining. And we said, well, there's some properties out here next to some big deposits. Why don't we pick up some properties? And so we went around and picked up a number of 3 properties. And then we saw a public company that was selling for nothing, but it had some very interesting high grade at depth. Multi-ounce over, 3 to 5 meters. So looking interesting. And we said, well, that may be something we should be putting some money in it. It was, it had road access, it had a mining permit in place because it wasn't mine, underground development, power coming to the site, and you think, well, all these things are already there. So we'll just get the drills on the property and do it. So I ended up getting 37% of the company. And we're going to start our exploration program. It's in Manitoba, and we'll start drilling in the next couple of weeks. And we have about $2 million in the treasury right now. So we'll see what we can find, and then if we hit something good, It's in a district that there's a number of mines. You got lots of people who are suppliers, workforce, all there. Should we hit the mother lode?
So you're mainly still, your focus is still mainly precious metals
Well,
because of your background, or?
yes. Well, it's treated me well, but we also have we had in McEwen mining we have a copper project, and we had some operational issues in the last few years where we didn't deliver on guidance, and I've never seen so much goodwill in the market disappear so fast in terms of stock price falling out of the sky. And that's turning around, but it's we had this copper project, and I said it's a big copper project. I mean, it's the 9th largest undeveloped copper deposit in the world, and I'm saying, but we're not getting any credit for it because it's being obscured by our operational problems in the precious metal end. So in the summer of 21, I said, well, let's separate that out. And I said, we're going to finance it separate. We're going to raise about $80 million. I put $40 million up to start the financing as the lead. And then it took a year, but we raised another $42 million, and Rio Tinto came in for $25 million. And so we closed on that in August of last year. Then Stellantis came along, and Mike will talk about that, but they came in with 30 billion Argentinian pesos, worth about $155 million. And Rio stepped up their investment, so they're in for 55 million, and Stellantis. And I should say that 155 million is the official exchange rate, and Argentina is going through inflation, so if you were to take that money out of the country, you'd probably get about half of it. But since we're using it in the country, we're on the project, use that. So both those companies are 14.2% shareholders. So there's about 28.4% their combined position where they say they wanted a right to participate in all future finances. So we could have almost 30% of any new issue done.
And are you looking for more copper opportunities in Argentina?
This one's a big one. This is multi-generational mine life, producing 200 to 400 million pounds of copper a year. It's a giant.
Okay.
So, no, I mean, I'll look, but it's not going to take my attention off this one.
No. Sometimes, the elephant in the room is exactly that. It's an elephant in the room.
Yes.
Wonderful. Is there anything else you would like to share about the industry while we have you?
I think the timing is good for people to start looking at the junior sector, which has not performed as well as the seniors. As the price goes up, for a producer, a high-grade producer, you get the maximum leverage. All of a sudden, your profit margins start appearing and growing. And the exploration side, they're the best approach to buy a package of juniors, because you're not sure how many are going to run. But their runs can be enormous. Like you mentioned Great Bear.
Yeah.
I bought into that personally and for McEwen Mining at $1.50, and it got taken out at $27 a couple of years later.
That's a nice healthy profit.
I didn't get quite the 27, but I had a nice run in there. And there are others like that. This little Satori was no longer Satori, it's now called Canadian Gold Corp. We went in at 5 cents, it's trading at about 30 cents, and that's in the last 4 months.
Yeah, you can get some pretty wild swings pretty fast.
And so if your investors can look at it, some of the big runs that happen in tech, I think we're on the verge of seeing that happen in the junior mining space.
When you look at juniors, what's more important to you? Is it the project or the management?
Um, it can vary. Great Bear, I saw an area where I'd been active in and had Gold Corp success had been, and this was only 10, 15 miles away, and I said, how come we didn't see that? But it had, it was hitting high grade over intercept lengths that were similar to what I'd seen at Red Lake. And I liked the way the management team, which are geologists, looked at. Sometimes you look at it and go, I really like the property. I'm not too sure about management, particularly management if they don't have any money in the game. That's a turnoff for me. But it varies on the situation. I mean, the ideal is good geology, good management, but you can find opportunity where there's good property and maybe not the desired management, or management's there and they're using technology. And I think technology comes into play too. Is, are we finding something that finds copper sooner, or the gold? Is there some way we can extract it faster? And it should look at other areas like dust control. Companies that supply the mining industry with products that will help them comply with the ESG mandates, because those are going to come in larger demand. So you're around the mining industry, but suppliers to it.
Mining adjacent as opposed to actual mining.
Yes.
Interesting. When you're looking at the projects, do you prefer people that are going back over old ground again with new eyes? Do you prefer old mines that are being looked at again with new technology? What would you have as a preference?
There's an expression in the mining industry that most of the mines are found in the shadow of the head frame. That don't overlook. I mean, Red Lake, where in Gold Corp we had great success, there was a gold rush in the early 20s. There was a gold rush because of some discoveries right after the Second World War. There was a gold rush started when we released all our geological data out over the web on the Gold Corp Challenge, which was an online, one of the first examples of incentivized crowdsourcing in the world. And it came from the mining industry. And then Great Bear kicked off another one. I mean, Great Bear got bought for a little over $1 billion by Kinross.
Yeah.
But that's all in one little package in northwestern Ontario. And I was just struck by that. First Quantum and that got some of their startup in Sudbury, where they've been mining for over 100 years. And they picked up properties that were, it was like the garage sale we were talking about earlier on.
Yes.
No, they were sitting in inventory, but no one was looking at it.
So those are the types of opportunities that you see value in.
See there? And sometimes there's just a different way of looking at the world that catches my imagination. But more often than not, it's in an old district that someone's taken a different interpretation. Our discovery at Red Lake for Gold Corp, we found the gold at depth where it wasn't supposed to be. It was sitting in the hanging wall. It was the mine next door. It was in the footwall. There were all sorts of, it broke the geological interpretation.
Yeah.
And people said, well, it shouldn't be there. But it was.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.